Have you been trading options for a while, but still have yet to find a profitable options day trading strategy? Are you a seasoned trader looking to grow your playbook? Or are you just starting your trading journey and unsure which route of the stock market you want to pursue? Do you think options are too risky or too complex to learn? What's up, everyone? This is Eric with Theme Options Trading, and today I'm going to discuss one of my favorite trading setups that you can add to your playbook to help you double your trading capital daily. Does this sound too good to be true? I used this setup on a trade I took recently to double my trading capital, which I will speak to. In this video, I'll discuss the setup details, my thought process, how to use alerts to your advantage, and so much more. Let's get started. Alright, so here we are, starting on the daily chart. As always, I take a look at the bigger picture before I hone in on the 1 minute chart. I want to see what's happening from a macro level to see if it can better my thesis one way or another. So what do we see here with NVIDIA? We see some consolidation, sideways movement, range bound, and we break out higher. Not only do we break out higher, we push from about 500 in early January to almost 1,000 in early March. This is a major move. This isn't some penny stock. It's NVIDIA, one of the Magnificent Seven. This is a large company. This took a lot of buying power to get this high. But after we almost hit 1,000, here we are once again with the range bound movement, some sideways action. Are we going to consolidate to make a push higher or make a push lower? Right now, we don't know. So what do we need to look towards? We need to look at the intraday themes or multi-day themes and the current market cycle. This will give us clues to add to our thesis and give us conviction on a trade. There is one line here that is of interest. We see our bag holder line. I had to modify this just a little bit. Normally, I apply this line over the past year. Since NVIDIA has had a strong leg higher since the beginning of the year, I just shortened the duration to 6 months. So this is the bag holder line within the last 6 months. So now let's take a look at the 30 minute to see if we can add to our thesis one way or another and identify some key levels. Let's identify some key levels. First, on the top, above our bag holder line, we can see that about 925 is a good key level. On the lower end, about 850, I look at this thing every day. I know 850 is a major key level. This 850 level I have been watching for a long time, and I've called it out in my newsletter and in my Twitter. If you aren't subscribed to my newsletter, I post a weekly watch list with my thesis on what's going to happen on a few trades and an update on the market. And I try to post my trades on my Twitter as well. So give me a follow on Twitter and subscribe to my newsletter by clicking the link below. And at the very bottom here, about 830. Let's now look closer to the bag holder line. Is there any other area that's been rejecting a lot? I would say 900. Look at all these attempts. Reject, 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 reject. Consolidation, reject, reject. 900 is a good line. Okay, so now we have our key levels. Let's look at the theme of this stock or the recent repeated behavior. What's happened here? Well, we made the 1,000 attempt and then just dumped. After this dump, we have tried to reclaim this bag holder line and have been unsuccessful. These pushes get lower. And honestly, this 900 level is a little bit of a stronger line recently than this bag holder line. The bag holder line is obviously, the ultimate line in the sand, but this 900 level is pretty strong. There is a lot of weight to this. Look, we're not even touching this bag holder line. We're getting close, but not really. So this 900 line is pretty important. So what do we think is going to happen on Monday? Well, a solid trade plan would be a 900 area push and reject. because that is the theme of this stock. What would be a good profit target now? Well, push, reject. Where might we meet some hesitation? This liquidity zone right here, around 875. Why is this important? Why is this level important? Well, we're on the 30-minute, so NVIDIA spent pretty much the entire day around this level. There are a lot of people stuck there. If we test it, there's going to be some hesitation because a lot of people are going to be exiting. Okay, now we have our profit target. Let's look at our risk. So if we reject this 900 area, what would prove this trade invalid? Well, either a reclaim attempt on this reject, but we don't know that level yet because we're not trading during the day. So we'll take the more conservative approach and see if the math makes sense. The level of invalidation would be our bag holder line full reclaim. So about, we'll say $10. So $10 risk with about a $25 reward, 2-to-1 and some change, risk to reward. The third component to determine if a strategy is effective or not is win rate. The way that I trade this, I know that the win rate is in my favor. So yes, this is a good trade plan. Is it going to pan out? I don't know. I'm not perfect. Sometimes my trade plans don't pan out. Sometimes I do and I'm wrong, but that's okay. I trust my data. I trust the process. I have an edge. And if it doesn't work out, it doesn't work out. That's okay. On to the next one. So from an equity standpoint, that is favorable. Now we need to decide what options contract we're going to trade. I have other resources out there that help you determine which to decide. I'm not going to get into all the details, but from a high level, what day of the week is it? Monday. How many days left until expiration? 4, because NVIDIA's contracts expire on Friday. That's important because this has a lot of time to move in our favor. What else is next? It is a weak market cycle. So this is favorable for our position. So there's a chance that this could break right past our profit target and keep moving and break past this 850 major key level. If we break past this 850 major key level, this thing is going to tank. What strike price do I want? 800. I still want there to be some room left to go after this break, and if it goes in the money, I can roll. I like the way options move better when they're out of the money, especially with longer days till expiration. That's how you can capitalize a lot on them because they're quote unquote less likely to happen. That's just the way I trade. So the 800 put will be of interest. Now we have identified our trade plan. Let's look at the 1 minute chart now and see if we can find an entry point. All right, here we have the 1 minute chart. Let's look at the intraday behavior and see if our plan has panned out. We have a fake breakdown, reclaim, some consolidation, and a push higher, a dip, bought up, and here is the reject that we wanted. So there's really 2 approaches to this trade that I need to discuss. The first approach is you can short strength. Unless you have a defined edge, that is pretty risky. You need to make sure that your data is in your favor. And you need to be comfortable shorting strength, or in option terms, longing a put on strength. Because this could go heavily against you. Sometimes I do it, but in this case, I was not going to do it. Second, the more conservative approach is have the reject and short on a failed push. What happens if we do not have this failed push here? Sucks. No trade. You don't want to chase and have insane risk. If we don't have this bounce, that's okay. On to the next one. but I would rather have my risk right there on this. I want to see my risk right in front of me on this trade so it can help me calculate my risk reward ratio and confirm the weakness on the stock. So we have our top here. We push right here, and I entered at 9.17. The put was trading at about 50 cents. My delta was negative 2 cents. Gamma was 0 cents, which is expected. Theta, negative 30 cents. Seems large, right? Par for the course for me. I always trade out of the money. The shorter dated contracts, theta is going to work against me. I know that. But I actually have a love-hate relationship with it. The way that I trade, I want my moves to work out immediately. If they don't, that's okay. Theta will kill it, but also it didn't do what I wanted it to do, so that's fine. But if there is little time till expiration and my move does work in my favor, what's going to happen? My contract value is going to reflect it. I will have large gains. So theta is always a risk for me. That's par for the course. But just know that theta is going to eat away at your contract value. So you want this trade to work out pretty quickly. Next, our Vega. Vega is about 6 cents here. Not really a primary factor for me. Vega affects the contract more for longer dated. I trade shorter dated, but I can't disregard it. How did I know this was a valid entry signal for a failed push? The tape. I lean heavily on the tape for entry and exit. That is my edge. I have a course that can help teach you how to read the tape, but that is really how I stepped up my trading game. Click the link below, take the course. The tape can and will better your trading if you can look at it the right way. I saw selling flows on the tape, gave me conviction to enter, and that's it. The trade either works or it doesn't. Next, where is my risk? My risk is actually a little tighter than our conservative estimate. High of day. That is a common area that the sheep, where a lot of the sheep set their stops. But in this case, it's valid. We're in a weak market cycle. My thesis so far is confirmed. I'm okay with setting a high of day stop. So I entered about, let's say 900. My risk is about $6. $6 risk, $6 risk for about a $25 gain. That's even more than what we anticipated. Great. This is from the equity standpoint though. How do I know where to risk on the options contract? I've traded this setup long enough that I know that if my contract value decreases to about half, that something isn't right. Doesn't mean for sure exit, but I need to look at my trade a little more and see if my thesis still holds. Remember, I want this to work out immediately in my favor. Okay, that is from the options value standpoint. What about from invalidation on the equity level standpoint? Like we just talked about, it would be the reclaim of this high of day. So what can I do? I can set my alert just a few dollars below. So that way, if we get close to attempting high of day, I know to watch a trade and see if it's going to still hold true or not. So let me set an alert, save myself some emotional capital. All right, my alert is set. Now, where is my profit target? We said 875. Well, we want to set an alert here as well. So let's set our alert just a few dollars above here. All right, so now we have our alert set for a profit target and a risk potential exit. But before moving on to the trade itself, I need to discuss one important thing. If you do not feel comfortable with the uncertainty of what the contract value is going to be worth, come time invalidation, just use a 100% stop. What do I mean by that? Well, whatever you enter with, just assume it's going to go to 0. You have to make sure that the math still favors this. You have to make sure the risk to reward and your win rate still have an effective and profitable strategy in the long run. But if you are too concerned about this reclaim right here, just have 100% stop. It'll take all the guessing out of it. How do we know what our reward will be? Well, we can use delta, but delta isn't perfect. It's a mathematical calculation. Further, theta is going to eat away at this contract value if it doesn't happen immediately. There are some software out there that can help you calculate the contract value. I don't show that way. It makes trading too complicated. I want this to work out immediately. If not, that's fine. That's the way I trade. I keep it simple. But I know the way that this setup trades, on average, this should at least double. That is an average. Sometimes it's more, sometimes it's less. So I have a risk of about half of my contract value, or in this case, 25 cents, and a potential reward of about $1 to $1.25. This is not 100% of the time. The market cycle affects this. The theme affects this. Order flow affects this. But I expect to make at least 100% on this trade. If not, that's okay. But that is how the math is in my head. I take the more conservative approach. So I tell myself a 2-to-1 risk to reward on this. It is a little more, yes, but I'm expecting a 100% gain. If it's more, phenomenal. And let's see if this trade works out in our favor. All right, so the alert triggered about 5 minutes before our profit target, and the profit target does hit. I exited for about a 100% gain. I doubled my position here. So how did I know to exit here and this thing wasn't going to move faster? Well, what happened here at this bottom? Bounce. Broke it. Did we break heavily? Not really. There was still a slow downtrend. What did I think was going to happen here? Bounce and push. Could this have done the same thing as this other one where it would consolidate for a little bit and then push slower? Probably. But that's not what I'm looking at. I'm a day trader. If that happens, I'll enter again. That's fine. I trade intraday. But if not, even better. I exited at the bottom. Doesn't matter. Doesn't matter what happens after I exit my trade. This can go to infinity. If it does, that sucks for me. I need to get back to work and study and see what I missed. You have to be able to accept your exit. If you're not happy, do the research, see what you missed, and get better next time. So I exited here. About 8.75. My contract was worth $1. Doubled my money in about 2 hours. The best part, I saved a ton of emotional capital with my alerts. I have learned that me watching a stock doesn't mean it's going to move in my favor. That's hard to do sometimes. It is. But my focus was elsewhere. I had my trade pan out. I'm longing, so I could only lose my contract value, and I'm okay with that loss. My contract value didn't diminish that much. I did have a favorable move, but we can see how slow it was. So theta did affect this pretty much because this was one of the slower moves. But that's okay. I will take a 100% of the game every single time. So I mentioned a ton here, this bag holder line. This is a very important line. I actually have another video that goes into a lot more detail about what that is that you need to watch. You need to add this to your playbook. And that's it. Thank you so much for watching this video. Please like it and subscribe to my channel if you want more content like this. Until next time.